Alright, so if you want to be good at trading, you're supposed to have the habits of setting key levels like a lot. You're supposed to have this habit of just setting up key levels a lot of the time. So if you look at most traders, these screens they have marked out a lot of levels. And not people saying, oh, don't add a lot, blah blah blah. Yeah, you add the ones that are important, not the unnecessary ones. Not like bro, there's some people that will just be doing this, this, this. No, like you're supposed to like set downs that are important. Alright, so I'm gonna clear all of this so you guys can see how I like to make my entries in trading and how I get sniper entries and how basically it's easy for me to predict the market. Alright, so first things first, you just want to spot the direction of the trend. That's the first thing. So is this an uptrend or a downtrend? But before we get to this part over here, let's first ignore all of this. Let's first ignore all of this right here. Let's ignore that. Let's ignore this first. Let's focus on this one first. Alright, so is this right here an uptrend or a downtrend? This is a downtrend, and let me explain why. So looking at it, yeah, it looks like a downtrend, but sometimes the market could look like it's going down, but really it's on an uptrend. So the reason why this one downtrend is because the market kept on breaking structure right here. You can see it broke structure over there, and it also broke structure over here, and also it also broke structure. So this is what makes it a downtrend, because it keeps on making lower lows and lower highs, lower lows, lower highs. But the moment it broke past this level right here, then it was no longer an uptrend, it was a break. I mean, it was a change of character right there. So now it's now an uptrend over there. So how me I like to find my entries in trading. Let me first clear this and this. So like I say, mark your key levels, like mark those key levels. So right here, I want to mark the levels where the market had reversed from. So the levels where the market had reversed from are the main key levels, because it shows that there is some kind of liquidity over there, like there's some kind of smart money over there, like there's some kind of control over there. Like, why did the market reverse there? If the market reversed over there, that means there's buyers or sellers. So if the market is on a downtrend and then you see it reversing going up, that means there's buyers collected up over there. So yeah, those are the key levels you must mark. So back to the forward time frame. So let's mark our key levels. Now you can either use this, just using this, or you can also use the boxes. So for now I'm going to use the boxes. Most of the times I'll be using the lines, but let me just use the boxes. So you have this right here. I'm going to mark this level. So you're supposed to mark the candlesticks that started reversing. Not like here at first was a downtrend, like those are bearish candlesticks, then boom, all of a sudden bullish candlesticks came in. Then next up we have these ones right here, and we can take it further to that level, and you can see once the market reached here, like there was some kind of reaction, it went up, then boom, came back down and broke past that level. Why else? Then here as well. Should we mark this one instead? Yeah. So now how would I trade this? So how I would personally trade this is like this. So if we're trading with a trend and it's like on a downtrend, let me come here first. Also mark this one. So yeah, basically that's so. We now go on the lower time frame. Yeah. So honestly, if I'm being very with you guys, here I would have gotten stopped out kind of. But let me first see. Alright, so here's how to not trade this. So number one, you want to look for sales, because the market's on a downtrend, it keeps on breaking structure. Even though this market went insanely high, it's still an uptrend because it did not break past the previous retracement, which is this one right here. So it's still on a downtrend. It has to like go above this for it to be an uptrend. It has to go above this, then yeah, retrace, then keeps on going up. So as long as it did not go past this level right here, we're still on a downtrend. So yeah, my target for selling would be at this level right here, because this level is where the market keeps on reversing. Here you can see it got respected, here it got respected, like even here as well, like there's some kind of reaction over there. So when the market reached here, it showed us reaction, but now we want a confirmation here. So there's steps to confirmations, there's steps. Hold on. So the first confirmation for me is this. Number one is market must be at key level. Number two is reaction or rejection. Market must be at key level, then I look for a reaction or a rejection. Also, sometimes you could also look for liquidity. When you say these are confirmation, so the first things first, we want the market to be at a key level. So if you look right here, you can see the market is inside our key level, but now what you want is a reaction or a rejection. So we have a reaction over here, but we do not have a rejection. We have a reaction, but it's not a rejection, because this could be a retracement. That could be a retracement. Actually, limit confirm. Yeah. So we have a reaction, but we do not have a confirmation yet. So what my confirmation is this. So let's say market is on an uptrend. Like I told you guys about change of character, the market must do this. Failure to break structure. So it does something like this. It goes down, retest, then continues going down. That's what my confirmation is. This is what I want to be able to sell. So right here, as you see, the market gave us this kind of move. So now here's the part of liquidity now. So a lot of people saw this move. Number one, market must be at a key level. They're like, all right, so the market's at my key level. Then they saw the market coming up. Boom, it did this, and they were like, guys, let's sell. Finally, we got a rejection. They enter right there, say their TP right over here. The market comes down a little bit, and they're like, yeah, it's going down. They open more trades and they risk more because they feel like this trade is guaranteed, and then the market just reverses and takes them out. So here's how the market collects liquidity. Right there, they were the liquidity. If you don't know where the liquidity lies, then you're the liquidity. So yeah, this could have been a retracement, and the only way you can confirm if it's a retracement or not is by waiting for it to end. So as you can see right here, market was doing this high, then does a retest, goes up, retest, goes up, it does a retest. So what makes you think that this couldn't be a retest as well? What makes you think this couldn't be a retest? The only way we could know if it's a retest or not, if it does this, comes up and then rejects it. That's how you can know if it's a retest or not. So the best thing to do over there is wait. So may I be patiently waiting. I'll be patiently waiting. So the market went up, retest, went up, retest, went up, retest. Hooligans entered right there, but as the smart money, the wise ones, we kept waiting, and you can see the market broke structure. Yeah, then it came back down, and after coming back down, it stopped here, failed to break structure. So I know many people could be asking, oh JJ, what if this small move here is gonna continue going up, blah blah, stuff like that. So now what confirms that this is now a downtrend? What now confirms this uptrend or a downtrend? What now confirms that the market has now reversed is this. If we come right here, then boom, you see this. So what now confirmed it? The wise ones be entering here like this. You see this level right here. This level right here. That's where the smart ones enter. So if we go on a lower time frame, let's say 15, and you come back to that same exact level, alright, so let's go to 30 minutes instead. So right here we can see that this is a retest, right? So what you want is the market to close below this level right here for it to be considered as a change of character. So this is a change of character. So this right here, break of structure, break of structure, break of structure. So you now want the market to close below this level here. So here you can see it rejected. It rejected it here as well. Then here, boom, it closed below, but not quite well, because you can see it has long candlesticks below it. So the market isn't like really that serious. But then it went all the way up, then came, and then it closed completely below, like we have a body close, then a retest. So my entry would be around right here. So this is the confirmation I was talking about. Where is it? This one here, you see, break of structure, failure to break structure, change of character here down. The change of character is here like this. The change of character there, retest, make your entry right here. So yeah, same thing that happened right here. The change of character happened right here like this. Yeah, this exact line here, change of character, retest. So we make our entry right there, set our stop loss above this right here. Then I'll take profit at a level that's most likely of getting hit. Never set you take profit at a level that's less likely of getting hit. Set it at a level that's most likely of getting hit. Then your stop loss, you set it at a level that's less likely of getting hit. That's how I like to trade. So I'll put my TP around somewhere here like this. Then if you go further, you can see it got hit. It's basically a 1 to 3 risk to reward. So yeah, that's a very good trade. So yeah, that's from this key level we had marked to all the way here down. Then here, honestly, this one here, all they really know if it's gonna reverse over here, because maybe around somewhere here like this, but it did not really enter in there genuinely. Let's go on a lower time frame and see if maybe you can support a reversal over there. I'll be honest with you guys, bro. If other spots at this, I'll be honest with you guys. Alright, so if you come right here, nothing is set up your key levels. So have my key level right there. You can see it was respected here, here, and also if you go further, the market kept on reversing at this specific level. So right here, the market is still on a downtrend because it was breaking structure. If we come further over here, you can see the market broke structure right here. So this is a downtrend, but then all of a sudden, hold on, let me see. Okay, this structure is for the higher time frame, for like a 4-hour time frame, because if you go on a 4-hour, that's when you can see it perfectly. But anyways, so we can see right here the market was breaking structure around here like this, kept on breaking structure, boom. It was just on buys, break of structure, uptrend, break of structure, uptrend, break of structure, uptrend, uptrend. But then all of a sudden, changed character, and you can see that over here, as it gave us a double top, it failed to break structure. So that shows that the buyers are now weak. So then right here, if I go on a lower time frame, you're going to see it well, but I doubt this thing is going to let me go that far. Alright, yeah, you can see here, retest, break of structure, retest around here, then broke structure right here, broke structure right there, give us a retest, and then it's again broke structure at this level right here, went all the way down, then just like stopped breaking structure completely, and you can see it right here, like it completely stopped breaking structure. So it's supposed to keep going lower and lower, but all of a sudden, it's the last break of structure it gave us was this one right here. This is the last time the market broke structure over here, but then the next time it stopped, then it just gave us like a double top right here. Then after that, boom, it closed above. So the close above alone is what now gives us a suspicion that this market is going to go up. So it's not a confirmation, it's a suspicion. So it shows us that, oh, the market is reversing. It's a confirmation that the market is going to reverse, but it's not a confirmation to make our entry yet. So yeah, the market closed above, the market made a body close above these candlesticks right here. So a lot of people entered immediately as they saw that. And maybe your take profit got hit, and that's great, but it's just risky entering in there, because a retracement will definitely happen. Because if you see right here, the market body closed and it went up and boom, give us a retracement. So the best thing to do is to enter after the retracement. And some retracements are just too dangerous. They go all the way down, then the market continues going to its direction. So I want to go to 15, but this stuff won't let me. Anyway, so we have a body close, then we get a retracement. I wouldn't really consider this as the end of retracement, because it's a very long candlestick. This one, it's a very long candlestick. It could be a liquidity grab. If you compare it to the rest of the candlesticks, this one is still long, so we want like a genuine retracement. So I feel like I would have waited for this one here to happen. some entry would have been around right here. Once a bullish candlestick, simple one, not one that's too crazy. So yeah, this one I'll take, this one right here. If I traded this, then that means I'm greedy, because always tell myself, man, a liquidity grab is not a confirmation. Anyway, so after finding where our entry is, we now go to a higher time frame. I feel like I should set my stop loss below this or around there. Then I go to a higher time frame and just go to 4 time frame. So TP around here like this. There we go. Have a beautiful trade. Should I put my stop loss over there? I feel like that is too far. Boom. You have a beautiful trade right there. So if you follow these confirmations, bro, like if you follow this trading plan here, trading becomes easy for you. So let's now go to a higher time frame and let's see if we extend this further. You can see, like, bro, the market keeps having reactions at these key levels, like right here. Let me now remove this. If you look right here, bro, the market's had reaction, and this is an old key level, like from all the way inside from 13th November, and it's still, hold on, bro, from 14th of November to 12th of January, and it's still effective. So let me show you. If somebody entered in here for buys, because all the markets at a key level, blah blah blah, they wouldn't fail, bro. They wouldn't fail. They wouldn't lose this trade. Like, bro, if you entered around here, you couldn't enter in this kind of thing. But let's say you entered here, TP over there, like, you can see how much the market moved because of this key levels. So those key levels be having a lot of effectiveness in them. So I saw it's very important to set your key levels. But anyways, I didn't enter this because the market's on a downtrend, bro. Like, the market's on a downtrend. Now let me show how to trade this. So we can see the market keeps on breaking structure. Broke structure right there. But before I show you guys that link, I'll show you this. So you can see also here the markets broke structure right here. The market broke structure right there. Right, so we have a break of structure. It confirms that market's on an uptrend. Where else? Bro, what's wrong? Alright. Here it failed to break structure. But then here it broke structure. Here also it broke structure. So yeah, this market was on an uptrend for a very long time, but then all of a sudden when it came to this level right here, when it came to this level right here, the market broke past it. So now that's a change of character. This right here is a change of character. So that means the market's now on a downtrend. The market has now decided it's now a downtrend. It's no longer an uptrend. It's a downtrend. And then you give us a retracement. So the best place to make your entry would have been here. This a 4 time frame. But if you want to get a sniper entry, then go on a lower time frame, like let's say 1 or even 30 or 15. Find your entry in there. That's how you could get a sniper entry. So yeah, very good trade, but honestly entering here would have been tough on a 1 hour, because like we had said earlier, our confirmation is this. Yeah, like this isn't a confirmation really. Like, bro, this could have been a retest. This could have been a retest. So who could have entered here? Like I said earlier, bro, our confirmation is this. We want a change of character. The market's on an uptrend, boom, boom. That's what you want as our confirmation. So I feel like you can get that if you go on a lower time frame. Let me see if we'll find that. Or you kind of have it right there. So here you can see the market rejected this level. It did not body close over it, rejected that level. Then I'm sure if you go on a lower time frame, you can see that the market closed. Like, let me see if I can go to a 15. Hope this works. Alright. So on a 15-minute time frame, you can see the market completely rejected this level. So that's a failure to break. Like, that's a failure to break structure. So it shows that the market is gonna reverse. So right here we can see the market kind of like closed below this level right here. Close here with 3 candlesticks, they all close below. So that's not really a genuine confirmation, because we want the market to like close below and do something like this. We wanted it to do something like this, give us a double top, and also it swept liquidity. Swept liquidity, comes down like this, then at least give us a retest, and you can continue selling. But the next candlestick just crashed, and then the market never went up. But let's say you entered in there, bro, that would have been a good trade. So you found the right place to make an entry. Yeah, with the strategy I'm showing you, you found the right place to make your entry, but you haven't found your confirmation to enter. But the place of making an entry, yeah, you found it is spot on. So we wouldn't really make our entry right here. So if we fail to make our entry right there, then you could find one around here like this, because remember, this is our retracement level. This is also our retracement level, this. So the market came, give us a retest, went all the way up, then boom, broke structure, came here, give us a retest again. So a good entry would have also been here. A good entry also would have been here. After this retest, the market came, retest, and you can see it's kind of rejection, candlestick close below. So yeah, we should have been here. But this candlestick, I wouldn't really trade brace too long, so maybe around here like this. Stop loss up there, then you set your TP all the way down to this line. That's a 1 to 3 risk to reward. So we shall test this strategy on FX replay. So just like that. So here I'm making them look easy, but trust me, it's not this easy, brace. It's not this easy. It's not this easy. Believe me. So here we have another thing, so you can see so I'm going to predict your USD on real time, and I'm also going to show you guys the results. So if we look closely, we can see the market is on a downtrend because it keeps on breaking structure all the way. Broke structure right here, so that's a downtrend. Broke structure right there, and here it's planning on breaking structure. So if you want to enter right there, you're not too late. You can enter there because the market is on its way to break structure, but your risk to reward won't be as good as if you entered after a retest. This would be like a 1 to 3.8 risk to reward, but honestly, I would enter this trade, man. A better place of entering is around somewhere here. So you can see yeah, I would enter here like this. So we have what we need right there. We have our confirmation right there. We have our confirmation, so you can see the market the higher high, boom, then they give us a rejection. So yeah, main trader being right there. That's why I traded this. Yeah, I know a lot of people are saying, oh, JJ, it did not break structure. I mean, it did not change character because it did not close below this level, blah blah. But let me explain. Let me show you. So there is a thing called internal structure. I think it's called internal structure, something like this. I had it from this guy GIFX. Anyway, so if you look closely here, there is this. Are you seeing this? High, then boom. You see this? Those small retracements, like those small trends right there. Then all of a sudden, that's a change of character right there. Then retest, then went all the way down. So if we go on a 1 minute time frame, we shall see it very, very well. You see this? So retest are right there, and this was the previous one. So you can see the market went past it, was a change of character, then boom, retested that level. So you could also enter over here like this, because that's a very good rejection, a beautiful one. So entering here, it's okay, even though this candlestick is long, because this is a 1 minute time frame. Candlesticks are long over here. Like if a candlestick is long over here, that's a small candlestick on a 5 minute time frame. So yeah, you see it's literally half of this one. But anyway, so entry right there, then TP all the way down here like this. Stop loss up there. So this is a sniper entry, a very beautiful one. So that's how I trade that. So now let's go to FX replay, and we now apply this strategy in real time. But I hope this works out. Bro, you must stay confident about your trade. So I'm not going to Euro USD, bro, because this, I think it's the exact market we've been trading. Because I'm seeing a double bottom this October. That was November. It was good. So, bro, it's too far. Let me just pick a different market. So this, bro, gold, not gold barely has retest. Anyway, so here also it's too much. If you guys see it's because I like be doing this stuff for I be backtesting the markets a lot, like a lot. So anyway, so we have this market right here. You can see here's our, we have a key level right there, and we also have another key level right here. Let me mark this one instead. Let's have a key level right there. Let's extend it further in case we see some future reactions. You also have another key level up here. So right now the market's not downtrending. We should be looking for sales. So like I say, number one thing you want to do is spot the direction of the market. So you can see how we broke structure. Broke structure right there. Broke structure here. Broke structure there. And you're also breaking structure right there. So the market right now is not downtrend. So obviously you want to be looking for sales. So I'll sell to that level, then this candlestick. So let me not find an entry around here. So what I'm not looking for is sales. That's what I want. I want sales. I'm not looking for confirmation. I want a confirmation. I want a confirmation. I want something like this. That's what I want. Yeah, let's play. Alright, there we go. Alright, so you can see the market has changed character right here because it has broken past this level. And the candlestick has body closed below. So now we want a retest and a rejection. There we go. Let me go to a 5-minute time frame to have a good observation of this. So yeah, that's my confirmation right there. Like, I don't see a reason why you shouldn't enter right here. Like, if you come closer, you can see, did the market break past this level here? Nope. So it's still on an uptrend. The market becomes a downtrend once it breaks past one of these levels. So did it break past this? Nope, still an uptrend. Did it break past this? Yes. It also broke past this low right there. So yeah, very good confirmation. And let's now also do this so you can see the market closed above this. That's an uptrend. So yeah, break of structure over here, break of structure over here, failure to break structure at this level here. The market failed to break structure at that level, so it just shows how the buyers are not losing momentum, but then it closed below this low over here. And not just this one, but also this one that it literally body closed below it. So you're now gonna higher time frame, set a entry right there, stop loss, TP all the way down, stop loss, let's put it at least up there. Let's play. Bro, let me open a trade on this one here. Fuck, too late. I be getting scared to go in a higher time frame, so I say go quick. Brazil is playing out. There we go. Now TP got hit just like that. So trading is tough, but if you actually focus and you actually come up with confirmations, like the confirmations I gave you guys earlier, where is it? This, yeah, just follow this plan here. Just follow this. Market must be at a key level. Actually, mark your key levels. Wait for market to reach at a key level. Boom, confirmation. That's how you're supposed to trade. Market must be at key level, reaction or rejection, then boom, confirmation. So if you go to this market here, let me show you guys again. You can see the market was at our key level. What's the key level? The key level is this one here. So we got reaction. What's the reaction? The reaction is basically a double top, failure to break structure. Those are reactions. Like out of all levels the market reached in, like why is it that once it reached this level here it failed to break structure? Out of all the key levels out there, why did it fail to break structure on this one instead? So the reaction shows us how much effective that key level is. So that's the whole purpose of the reaction. So yeah, here we go to reaction at this key level. Like, let me give you guys an example. So there is just random levels. Like I just set up random levels. And while the market is at these levels, like when the market's in the middle, it's literally breaking structure. It's breaking structure. All of a sudden it reaches that zone. It gives us a bust, man. Like bro, it fails to break structure. That's a very good reaction. That's a reaction right there. So it now shows you that this level is effective. But if the market breaks structure at this level, break structure at that level, it gives us a retest, and then continues to break structure, it means your key level is not effective, so you have to find another key level. And this happens a lot of the times, bro. Let me show you guys. I'm sure you can find one right here. Yeah, kind of like this one right here. Yeah, this one here right here. So if you come right here, you can see the market literally went above this key level, give us a retest, pushed all the way down. So now we're almost getting our confirmation here. If the market did this, I would have sold. If the market did this, that came up, then gave us a rejection, I would have sold. But the market did not do that. It just continued going up. So it shows that this key level is not effective. And that's all purpose of waiting for your confirmation. There's a lot of people that literally ignore the rest of the confirmations. So market must be at a key level. The market was at a key level. Market shows a reaction. It showed a reaction. So many hooligans would enter as soon as they see this candlestick right here. They would enter right there. They're like, all right, the market has given us a reaction, blah blah, but they did not wait for the confirmation. What did I tell you guys that the confirmation is? The confirmation is this: the market's going up, comes down, breaks here, boom. That's the confirmation. The confirmation is that when the market literally breaks past this level right here, that's the confirmation. And did the market break past this level here? Nope, it did not. So we did not get our confirmation, so I wouldn't enter this trade at all. I would not enter it at all. But anyways guys, so let me try and find another trade. I will trade this one here, but at the end of the day, it's the same setup. I feel like this market is gonna continue going down. If you do not get reaction at this level, the market could also reverse here. The market could reverse here as well. It's possible. It's possible for it to reverse here. It's possible. It can happen. But now though, you can know that if the market gives us reaction, you can wait for certain reaction. So like I said, some key levels get respected and some key levels do not get respected. Not like this key level right here. This key level did not get respected, even though this is a resistance level. But at the end of the day, if the market is above it, sometimes can also get respected as a support, and it can also get respected as a resistance at the same exact time. So yeah, this market right here, let me see if I can find one. Yeah, not like this one here. If you come right here, you can see this level was respected as a support and as a resistance, and the market was above it. When the market was above, like right here, it was respected as a support level. In here, it was respected as a resistance level. So it could happen here as well. So what I can do to know if that's going to happen is waiting for reaction. That's what we want. We want a reaction in the market. So yeah, let me try finding another market with a different setup. Okay, this one, very beautiful. This one is very good. Right, so we have our key level right here that was respected multiple times. This one, and maybe you could target these highs right there, or even these ones. I'm gonna target these highs. This. Also, we have another key level right here. You can see the market respected it over there. So I'm going to target those highs or these highs. So let's see if the market to reach this key level, and maybe you can find reaction. What I tell you guys, the confirmation is you want the market to be at your key level. That's what you want. Right now, is it at our key level? Nope. If it's not at your key level, forget the trade, bro. Wait for it to reach your key level. Some people sold overhand, they'll collect their profit, but bro, the most high win rate is this one here. Alright, bro, I'm gonna go the daily time frame. Bro, and sometimes the market want to enrich your key level. And here's the thing about trading: if you're the kind of man that does not trade when he's not supposed to, then you're a good trader. So right here you can see the market did not reach our key level, so you're not entering. And that's the thing about trading: you're going to miss trades a lot of the times. You're going to miss them. So yeah, sad that we missed a trade, but it's okay. But let's just see how this is gonna go. But we got a reaction at this level right here. Let me see if it gives us a confirmation. Alright, so we have a confirmation on this one. Failure to break structure, change of character, retest, rejection. It's a very beautiful setup. So TP all the way up there. I mean stop loss all the way up. They might TP, I'd say somewhere here like this. Just put my stop loss somewhere there. Let's play it and you see. Boom, bro, this is crazy, bro. Look at that. Alright, reaching here, it may not reach, but if it does reach, actually it could reach. It's probably going to reach. This is crazy, man. This is crazy. Hurry the fuck up. There you go. So I've just literally showed you guys the secret to my trading. I've showed you guys the secret to trading. I've literally showed you guys the absolute secret to trading. I'll be honest, bro, a few years from now I'm going to start selling this setup. So if you guys are watching this video, you guys have an advantage. I'm gonna start selling this. And if you think I'm selling this because I'm running out of money, no, it's because I'm a businessman, bro. Do whatever it takes to start a business. So just because, bro, I always see people talking about why some traders selling a course, blah blah blah, it means they don't have money, bro. I'm sure Elon Musk has a couple of businesses that don't bring him billions of dollars every time, but he still has them. So at the end of the day, it's business, bro. It takes one by one makes a bundle. Yeah, one by one makes a bundle. So yeah, if you're a businessman, doesn't matter if you're selling a course, bro. If you're a forex trader, doesn't matter if you're selling a course. Is there a problem with that? Is there a problem with that? So right now I don't have a course, I have nothing, but I'm not even rich. But I'm telling you guys, bro, I'm probably gonna be selling a course. Probably. It doesn't take a lot of my effort. But anyways, yeah, that's the setup, bro. That's the secret to trading. That's the secret. I'm literally giving you guys the guide plan, the full-on plan, bro. Like, it took me years to realize this. That trading is all about key levels, reaction, and confirmation. That's it. There's nothing else. All the stuff they've been telling you about, support and resistance, head and shoulders, head and shoulders, head and shoulders. So this is how head and shoulders is, right? Head and shoulders. So remember I told you guys, market must be at a key level. Key level first of all. So where's our key level? Right here. We have two key levels here. We have three key levels. That's a key level because the market reversed from there. Your key levels are pointing to the markets are reversed from previously. That's a key level, and the main key level on the head and shoulders is this one right here. So reaction and rejection, that's what we now want. So what are you looking for on this one? We're looking for a breakout on a head and shoulders, right? So once you get a breakout, that's already reaction. The market no longer respects this level. That's what we wanted. We wanted to see if the market respects this level or not. So the market gives us a breakout and then the retest, Boom, continue going all the way down. That's exactly what I've been telling you guys, bro. That's exactly what I've been telling you guys, bro. That's exactly what I've been telling you guys. Market closes below retest, make you enter the retest. Same thing here. Market closes below retest, make you enter the retest. So yeah, that's the confirmation. The confirmation is this right here, bro. Like, the confirmation is this right there. That's the confirmation, bro. Trading is hard if you believe it's hard. Something I used to think the hardest setups to find are the ones that actually have the highest win rate. But trust me, bro, the answers are right in front of your screen. The easy work is right there, bro. Let me pick a random market. Like, let me just pick a random market. I show you guys. Let me pick a random market. Bro, I literally apply this strategy with the same one I'm giving you guys. The same thing I'm giving you guys. It's right here. The same guide I was giving you guys. It's right here. Market failed to respect this level here. Failed. Continue going up. There's a couple of people that entered there and they collected their profits. And here, let me show you guys. Let me go to a higher time frame. So yeah, this was liquidity, but market respected this level. Boom, went all the way down. We are talking level. Let's go to a higher time frame and I show you guys that exactly what I'm telling you guys. What's happening right here. Exactly what I'm telling you guys. What's happening right here. Let's go to a 5-minute time frame and I show you guys. Literally, bro, look at this. Look at this, bro. Let me put this. Let me input this so you guys can see well. The market kept breaking structure. Kept breaking structure. We got a double top over here, then all of a sudden the market broke past that level. The market closed below. You got a candlestick close below over there. Boom. Retest on this one here. But anyways, made my entry. Trade kept on going. Just exactly what I'm telling you guys what I'm doing. Exactly what I'm telling you guys, bro. This stuff is literally on every trade, bro. That's the secret to trading that they don't tell you guys. Bro, it's just 3 instructions. Just 3. Market must be at a key level, reaction or rejection, then confirmation. That's it. There's nothing more to trading. There's nothing more to trading. And whoever's telling you there's more to this, I swear to God, they're lying. You all those stuff of strategies, blah blah. Literally, bro, the main strategy is that. Let me give you advice right now. The main strategy if you want to become rich in trading is support and resistance. Number 1, learn that support and resistance, channels, uptrend and downtrend. Those. Then, in my opinion, I feel like that's with the highest win rate is triangle patterns. Because, bro, like, that was literally my first strategy on the list. I'd written a list of strategies and I told myself, bro, I still have my books right here. I have my books. You guys think I'm lying, bro? You guys could think I'm lying, but they're right here, literally. I have my books right here with me. This trade, bro, same thing I was telling you guys. Applied it on this trade. Like, set up your key levels. Market must be at a key level. Boom. Reaction or rejection. Bro, look at that week. Look at that week. That's literally a rejection. That's literally a rejection. We're at a key level. We got this strong rejection. Like, bro, the market literally gave us 1, 2, 3, 4 candlesticks that are bearish. All of a sudden, it gave us 2 bullish candlesticks. If that's a sign it's gonna go up. And on top of that, from a key level, that's a sign it's going to go up. That's a strong sign it's going to go up. And on top of that, it swept liquidity multiple times. Swept liquidity right here. Here. So obviously the market was gonna go up. And boom, it did. It's actually going to hit these highs over here. It's going to reach this level here. It's going to reach here. And also, bro, like, I've been telling you guys about confirmations. Look at this. Look at this level. Look at this. Respected. Yeah, respected. Once the market reached here, it gave us reaction. Give us reaction, swept liquidity right here. If you entered for sales here, you'd collect your profit down here. Profit. It's literally what I've been telling you guys. The market must be at a key level, reaction or rejection, then a confirmation. I'm sure if you come right here, bro, there's literally a confirmation. Look at this. The market went up, rejection, went all the way down. I'm sure you could find a confirmation right there. I'm sure you could find it. I'm sure you could find one in there. So yeah, you have the answers now. So here's my book, bro. Like, the first what's it called? The first strategy I'd written on my book was this thing here, triangle pattern. Like, bro, it's something that worked out for me. So this book I've kept it for a very long time. Bro, start focus I was in trading. This book is almost full, bro. I literally used to rate reasons why I was losing my money. Look, the reason I lost my money, I let my greed take over my mind. I wanted to earn big from a short movement, one candlestick. Like I was scalping, bro. Then I lost everything. $20. I didn't wait on the candlestick to finish. If you enter before candlestick close, you're a hooligan. Open big, like this was my first trading plan. This was my first trading plan. Number one, open bigger market time frame and set key points, stroke key levels. Pay attention on all moving averages. So this was the time when I was into like indicators. Notice a pattern that you're sure is a winning one. Patterns, bro. Find entry points. Wait for confirmation. Do not be greedy. Small lot size. Open position. Be patient. Set and forget. One profit is better than $25 loss. $1 profit is better than $25 loss. 3 candlestick rejections before you open a position. 3 candlestick rejections. But that's what they be telling you guys. Oh, 3 candlestick rejections before you open a position. 3 candlestick rejections. Ah, bro, they're literally lying to you, bro. They're lying to you. They're lying to you. It's not about the candlesticks, bro. Trade with market structure. Trade with market. It's not about the candlesticks. Oh, 3 candlestick rejections. Bro, look. If let's say for example, I think they call it 3 black crows, something like that. Yeah, the market's bullish. Then you get 3 bearish candlesticks right here. 3 bearish candlesticks. 3 bearish candlesticks right here. So the gurus are gonna tell you to sell. That's what they tell you. Sell when you get 3 bearish candlesticks. Sell once you get 3 bearish candlesticks. So hooligans like us are going to listen. We're like, oh, we got 3 bearish candlesticks. Time to sell. Time to sell. Boom, the first one, the second one. Boom, right there. We sell from here. Then the thing you don't know about this is that if you look at this market, is it an uptrend or a downtrend? This market is on an uptrend because this low has not been broken yet. This low until one of the lows are broken, then that's when it becomes a downtrend. But if it's not broken, then it's still an uptrend because the last position that was broken was this retracement, the high. So it obviously is on an uptrend, broke structure. So a lot of hooligans are going to enter here and go for sales. Remember, the market, the buyers are still in control. The buyers are still in control. So it's possible they're just trying to collect liquidity. Then boom, they do this to you. Take your money and you start saying, it doesn't work. But it's not about all 3 black crows. It's all about market structure. What you follow is the line chart. It's all about market structure. That's what you want to chase. The market structure. That's what you want to chase. So let's come back right here. The candlesticks also play a big role. They play a big role. If you're looking for rejections, look at the wick. If you're looking for reversals, look at the wick. If you're looking for breakouts, look at the body. Reversals, look at the wicks. Breakouts, look at the body. So hooligans are gonna enter here thinking, oh, I can sell. Nah, bro, this market is still an uptrend. It's still an uptrend, bro. It's still an uptrend. Who knows, this could be even a retracement. The market's just trying to like do this. It has broken the structure right there. Literally broken the structure, still an uptrend. So, oh, 3 black crows, no. What you want as your confirmation is this. The market closes below there. Gives us a retest. Make your entry right there. So you want a body close. That's what you want. What you want to get is a body close. Something like that. And also you must also get a body close. You must also get a body close right here. So boom. It shows us that the sellers are in control. So then the retracement is an opportunity to enter. The retracement gives us the opportunity to enter. That's the whole purpose of the retracement. Entering opportunity. Entry opportunity, trade opportunity to make a trade. So that's how it is, bro. Trading is nothing complicated. Like, bro, if you can't listen to all those books, all the stuff, it's complicated. There's literally only 3 rules to trading. Market must be at a key level. Rejection, or reaction, then boom, confirmation. If you guys think I'm just some stupid kid here talking, let me literally show you guys the proof. The proof is right in front of your eyes. The proof is right in front of your eyes. The proof is right in front of your eyes. Right in front. If you look at this is our key level. That's a key level right there. Boom, market must be at a key level. Reaction or rejection. So like I told you guys, if you're looking for rejections or reversals, look at the wicks. If you're looking for breakouts, look at the bodies. So if you look right here, you can see, what did you get right here? What's this? A long wick. Sell all the way, go down. Sell all the way down. Boom, trade went down. Good entry, a perfect one. And like I told you guys about key levels, the market's at our key level right here. If you look at this level, like this level, what's the word that's using again? This level is effective. This key level right here is effective. You can look right here. I literally mark this level is effective. You can see if you go, let's keep going further. Let's go further. Look at this. Respected here, respected right here. Like the market was giving us reaction here, until it stopped giving us reaction and the market continued going down. So we kept on getting reaction. Like I told you guys, market must be at a key level, reaction or rejection, then boom, confirmation. So if you come right here, you go to a reaction here, so you'd buy all the way up, you make your profit. You came back, you again go to a reaction. So if you come right here, you can see the market was giving us lower lows. If you go on a lower time frame, sure we shall see it very well. So this, if you go here on like a 5 minutes or even a 15, you'll see it well. This, then all of a sudden closed above there, like give us a retracement right there. Then this candlestick closed above it, give us another retracement. So the entering opportunity, the opportunity to open the trade would be right here. Buy, go all the way up. You guys won't see it very well here. Like I see it very because me, I'm experienced, like I have experience in this. But anyways, yeah. So again the market came back here. Market must be at a key level, reaction or rejection. Look how the market suddenly starts reacting once it reaches here. It's giving us a doji, long wicks, boom. After how many bearish candlesticks? One, 2, 3, 4. After 4 bearish candlesticks, give us a really long one. Then a retest over here. Continue going all the way up. Then boom, you'd make your trade. I told you guys, market must be at a key level, reaction or rejection, then confirmation. Then right here, the market suddenly stopped respecting it, came down, broke past this level, gave us a retest. You could sell over here, went all the way down. So it's all just about the reaction, bro. It's all about reaction. Key levels to this. Look at this level right here. Look at the rejection this market gave us. Look at this rejection right here. Literally, bro. Look at this. You see what I'm telling you guys? The market must be at a key level, reaction or rejection, then a confirmation. So you can see here we got a rejection. Like this, we literally got a rejection. So find a confirmation somewhere in here to make the trade. So the reaction and the reaction literally tells you the market is going to reverse. Then the confirmation is what gives you an opportunity to open your trade, because a lot of moves be happening and some hooligans entering some levels and then they get a low risk to reward. So the whole point of the reaction is to find a good entry and make a perfect trade. Make the perfect trade. So it's literally this, bro. Like there's nothing more to this. There's nothing more to this. So tell me, this market's an uptrend or a downtrend? Alright, so right here we're on an uptrend, because you can see we've been breaking, like this market has just been breaking structure, like literally broke past this level here, broke past this. So that's a break of structure, so you're on an uptrend. It becomes a downtrend after it breaks past this level here. If it doesn't break past this level, then we're on an uptrend still. So what should you be looking for? Buys. That's what you should be looking for. It shows us that the buyers are still in control, not the sellers. The buyers are still in control. The buyers are still in control. It's them making all the rules, so they are the ones you must respect and follow. So yeah, I literally showed you guys a guide. I've shown you guys a guide. There's nothing more to this. Like I've been telling you guys, bro. Reaction. It was a reaction right here. You can see that. And like I told you guys, the market can be respected as a support and also as a resistance. Look at this. Got respected right here as a resistance, and once it came here up, got respected here as a support level twice. See that right there? Let me see. And sometimes the trades don't go your way. Honestly, if I saw my confirmation in here, I would have taken the trade and I would have gotten stopped out. There is losses in this, and you can't always blame your strategy. Like if you take a loss, the problem isn't your strategy. Let me see what fall for this trade. Alright, so you can see the market broke structure right there, broke structure in there, came here down, boom, failure to break structure, change of character, retest. That's our confirmation right there. Now what I'm trying to show you guys is that even though you have everything, you could literally have everything checked. You could have everything checked and your trade is going to fail. It happens. There is losses in this. The whole purpose of strategy is not to keep you a winner, it's to increase your chances of being a winner. That's to increase your win rate. You've literally seen what I just showed you guys here, like all these trades. It says it increases your win rate. That's the purpose of strategies. 3 trades right here. The purpose of strategies is to increase your win rate. So yeah. So here, let me see. Let me show you guys how to make this entry. So I'd mark my key levels. So we have this level right here. So I feel like I would make my entry at this one. So yeah, the market broke structure. So we're on an uptrend and all of a sudden changed character. So that means the market's not on a downtrend. Then what we want is now a rejection. So I mean a retest, then boom, that's our entry. So the market went all the way down, gave us a retest, sweet rejection. Let me see what candlestick would I take. I wouldn't take this one. Like give me a suspicion that the market's gonna reverse here. What you want is a candlestick close, a body close. That's what you want. This kind of like a doji and a small. So this one here, not really. I'd go for this one here. Then boom, right there. I would set my stop loss around somewhere here like this. I would fall for this trade. Then tip it all the way down there. And I'd be waiting. Then my stop loss gets hit. But I wouldn't take this trade, and let me tell you guys why. You guys are not saying, oh, JJ just wants to give an excuse, oh blah blah. So the reason I wouldn't take this trade is look at the time, bro. Like, look at the time. Why would I be trading at 5 a.m. in the morning? This is in a 4-hour time frame. Let's go back to a 1 hour time frame. Why would I be trading at 2 a.m. in the morning? Like London session is closed and also New York session is closed. Why would I be trading early in the morning? So if this happened at London session, I would have fallen for it. Would have gotten trapped. But I did not happen at London session, so hey, I wouldn't have fallen for that one. In fact, I wouldn't even see it, bro. I wouldn't see it. I wouldn't have seen it.